Welcome back to FDVN. Today, we will continue to practice our legal English skills through the topic of business organizations. Listen carefully, and fill in the blank. Remember to take note of the words you heard. Sole trader, Jamie Anderson, a partner in the commercial department of a law firm, is commenting on the choices for different trading vehicles for business. A client wanting to operate a business for profit might select from a number of different trading entities. Each has different legal characteristics and is subject to different rules and regulations. The simplest and commonest form of business structure is a sole trader. It's headed by a single individual, and it differs from a company in that the ownership and management is usually vested in the same person, who is personally responsible for all the debts of the business, and may thus risk becoming bankrupt. Finances are confidential and formalities are few. Aside from value-added tax, or VAT, regulations, the answer is different trading vehicles, trading entities, sole trader, bankrupt, formalities, partnerships. A common form of structure for certain kinds of business, for example accountants, solicitors, and architects, is a partnership. This needs to have at least 2 members and normally a maximum of 20. There is an exemption on size for some types of firm, such as solicitors and accountants. The relationship between the partners is usually drafted in the partnership agreement. It's now also possible to have a limited liability partnership, or LLP, which has a legal identity separate from its members. The answer is partnership, exemption, drafted, limited liability partnership. Limited companies. A private limited company, LTD, is a separate legal entity which can sue, and be sued, in its own right. The company is identified by its registered number, which will remain the same irrespective of any changes of name. In some instances, directors will be asked to guarantee the obligations of a company, for example by giving security over personal assets to guarantee company borrowing. A public limited company, or PLC, is differentiated from a private limited company in that the shares can be sold to the general public via the stock market to raise share capital. It's mandatory for a PLC to have at least 2 shareholders, 2 directors, and a professionally qualified company secretary. The answer is legal entity, irrespective, guarantee the obligations, public limited company, professionally.